Hello and welcome to SIBO Volatility 411. My name is Dan Deming and I'm with KKM Financial. Well, we're looking at a VIX trending lower here in the middle of the day. We did see it initially higher this morning. We did see a high of 30.91 earlier with the SPX under some pressure, but the SPX has found the ability to staircase higher throughout the afternoon, and with that, the VIX cash has trended lower, and that brings me to the roll market, which is widening as we're seeing the VIX cash trending lower out to $1.35. That's the difference between the first and second month futures, July and August. And we're seeing again that widen as that front month future is selling off more so than the second month future. And the VIX futures curve is holding up. We're seeing it steepen. So those back month futures are actually holding up relative to the front 2 month futures. Looking at VVIX, measure implied volatility in the VIX options, 112, low end of the range for the last couple of weeks. So we are seeing a little bit of a decrease in demand for VIX options. However, we have not taken out, the low from early June, which is 104. So that's the level I'm keeping a watch on. As far as if we were to break through there, that would potentially be another leg lower for the VVIX, which implies that the markets are finding some further stability. Looking at the action today, July, out of the money puts initially, 26s and 28s, and at the money puts was where the action was this morning. Now, as we move into midday, we're seeing call activity picking up quite a bit in July. Also, August, we're looking at August calls. We're looking at the 50 calls trading quite a bit, and the August 80s and 90s traded, I think, in unison with the October 100 calls, which is interesting. It looks like there was a three-way spread that possibly went up, at least from a time reference. That's what it looks like. So we are seeing some way out of the money calls trading in August and October. Next week, I want to point out earnings kicking off with the banks. Big driver probably for volatility expectations. Certainly the COVID-19 storyline will be another driving factor. And we do have some data points next week, economic data points that are all going to be filtered in here as well. So those are the things to look for as we move into expiration week for the SPX and the equities. However, VIX expiration post regular expiration.